Show. Very excited to be here. Just a shout out to everyone that has watched and been part of this show. Now, this is the first time you're watching. Welcome. This is a platform where I share, resources, provide resources to help SMEs thrive. And maybe you don't know what SMEs. SMEs is small and medium-sized enterprises, or you could say small and medium-sized businesses, or generally small in the small business space. And I'm just helping companies like that thrive. And of course, the information here is for okay, the information is for educative purposes only. It's not just, it's not for you to run with it. Of course, you can use this and talk to your professional to know, okay, where do you fall? This is just like a discussion starter. So you can use that to talk to any of your professionals. And of course, yours truly, if you don't have any CPA working with you. But I always like saying that because your situation might just differ, right? And so, I put a disclaimer out there because your situation actually might be different. So letting you know that this is for informative, educative purposes only. It will help you say, okay, does this apply to my company? And then you can run with it. But here I sometimes bring people to speak also, and I also respond to questions at the end of the topic, at the end of delivering the topic. So again, very excited to be here. Really welcome people that have just really thank people that have commented, and welcome more ideas. If you have anything that you want me to discuss or on this program, please don't hesitate to go to my website, the driniadesnia.com. I believe, okay, this way, driniadesnia.com, and it will take you to how, or tell you how to appear on the show, or provide your questions that I can answer on this program for you. All right. So today I have another interesting topic. I'm very excited. Now, the topic today is 5 non-financial factors that can impact an SME's success, right? So 5 non-financial factors that actually can impact an SME's success, right? Now, I know that when we look at accounting, if you look at my website, I always say it's beyond the numbers. Now, when I discuss with you as a CPA, I always look at the big picture. My background is in taxation, accounting, and finance, and also in business. So I sort of look at the big picture when I'm actually discussing with clients or discussing topics, right? So, sometimes it's not really about numbers per se. So really, and then when I say numbers, there's one of the points that might include some analysis, but generally, this is just beyond the numbers, right? And so what I'm discussing today is non-financial factors, right? Non-financial factors. Okay. Now, one of the first one, and of course, I'm listing 5. Of course, this is not exhaustive. Whenever I give a list of items, I really don't want to get caught up, or you guys get caught up with this list. Oh my goodness, there are more, or maybe I didn't mention this particular one, or I'm supposed to mention that particular item on the list. I get it. The list is not exhaustive, so I always have to say that. And of course, you might have other non-financial factors that and that's good. That's all well and good, right? There's nothing wrong with that. But I just want to make sure that I have to put it out there, because these are just 5 I just decided to discuss on this platform, right? The list is not exhaustive. All right, the very first one is management team. Now, as a small business, now, it might be only you, I get it, but it could be people that you're bringing on to the management team. I see people that are owners and they want to bring people, might not be people that will own equity. That might not be people that own a part of the business, but just people in management. I've seen people like that, right? And it's very important to know who are the people that you're putting there in management. Now, people get so caught up with okay, experience, or no, I won't say experience, we'll call it qualification. All well and good. It's good to know that this person is qualified, very good. But you have to go beyond that. Who is in the management team? I mean, you have to look at the person's reputation. They have the experience and the knowledge base, but a very bad reputation. Right now, I know what happens nowadays is that even not in management, before people hire anybody, they actually look into their social media profile. Yeah, right. And those are people that are not even in management, right? Right. So you have to find out who are these people. Yes, great. The person has a very good resume, excellent. But who are they really? It's people that when somebody sees that they're on your management team, that people are excited to either use your product or use your services. So when we talk about management team, you have to ask yourself, who is on that team, right? Who is managing you? Who do you want to bring on board, right? Does this person have a bad reputation? Is the person someone that can align with your values? You know, I know that one of my shows, I mentioned about your core values, that is very important for you to state it out there. What are your core values? What are the things you believe in? What are the things you can do? What are the things you can't do? That what is your company all about? Now, you want to make sure that the person that is coming onto your management team is aligned with you know, what you're looking, what your goals and what are your core values, right? All right. Let me set an example, because this is something that we'll still discuss, in this show. But let's say you're somebody, let's say, for example, your company is all about green. When I say green, is like sustainable things. They like, conserving energy. They do all these great things. And you have someone that has a reputation of going against anything green, like going against anything that is not aligned, right, with what your core values are, right? Okay, maybe it just depends on what your core values are. Of course, who is this person? So I would really stress that do not only focus on experience and qualification, which is very good. I mean, of course, you want someone that is experienced and qualified to be in your management team. That's a no-brainer. Of course, we know that. All right. But let's not only focus on that. Let's not focus on this person's reputation. Let's focus on the person's background. Is this person able to, put my company out there that, oh, this is a very great management team, right? You might say it's not a big deal. It is. It is, because a lot of people go and say, okay, who is even in charge of this company? Now, you might be there trying, but they also want to see, who did you put there as maybe a manager of this, or who is even your partner, right? Suppose management team could also include who's your partner? Who are you bringing on board, right? So please, before you actually hire anybody into the management team, before you actually bring somebody into a partnership, I would really suggest that you really, really look into who these people are, who the person is, right? All right. So management team is very important when I'm looking at non-financial factors, right? Okay. The second, right, that people, we're looking at success, right? Because I am now on the other side looking at the company, right? I'm looking at the company. Somebody is okay. This person is maybe a customer, right? A customer looking at the person will look at, first of all, who is in the management, who is this person managing this company, even before customer wants to come in and do business with you, right? Now the customer will also look at and say, what about this company's reputation? Some companies really have bad reputations. Yeah. Yeah. And I've seen companies, I tell people all the time, it's like having maybe your sibling, you have a sibling, and when you are growing up with your sibling, or even kids, let's say you have kids or you have a sibling or you have friends, good friends, when you're growing up, and you see even this in daycares, and you know how it's hard to build maybe a castle with Lego. I'm going to use something very basic so everybody can relate with that. So Lego, right? Building it, taking your time, and building that, beautiful castle with Lego, building that up. Then all of a sudden somebody comes and picking the Lego castle, right? Right. It takes just a couple of seconds. The move of somebody's foot, right? Just a couple of seconds. But imagine how long it took to put those blocks together, build it, make it beautiful. All right. Now let's liken that to a company reputation, right? Usually takes some time to build a company reputation. In fact, some people value a company's reputation, value a company by looking at their reputation. Example, I mean, I know I don't want to get too technical, but there's something called goodwill, right? Which is not something that you can see. It's like, what this company is doing well, and people know that company, and they see it as a company that is dependable, a company that, there's some companies that actually go out of their way to do things for people. There are companies that volunteer. There are companies that do so much, right? Just for them to be out there and say, oh, this is a caring company. I mean, I know companies that pay for their staff to go out and volunteer, maybe in shelters. They volunteer or do some volunteer work somewhere just to get their names out there. I mean, or they'll go to the volunteer food pantry, or give gifts to the kids for in the neighborhood for school, or they do something, right? So you want to make sure that your company reputation is up there, right? It's not about, oh yeah, your company is making millions of dollars, which is not bad, but I really know that a lot of people would really go towards a company that has a good reputation. What I guess, I would do the same thing, and I'm sure everybody else would. Everybody would like a company that is doing something, to help society, right? So going back to the example I gave about somebody that is in green energy, right? That is in green, not energy, but green stuff, right? For example, okay, this might not even be really green. Let me give you another example. There was an oil spill not too long ago, right? One of these big oil companies, right? And they had to really spend a lot of money to really get that thing cleared up out, right? I know they had to do a lot of damage control because, it was really bad, and I think a lot of animals in the sea died, right? And so that was really, they had to do a lot of damage control, because that's not a good thing. That's not good, right? For that to happen. I know it was an accident, so I'm not saying that they did it on purpose. No, that's not what I'm saying here. I believe it was an accident. Of course, I know. Nobody would just do that on purpose. But a lot of people on the customer, the client side might be, why didn't they have something in place to make sure that kind of thing doesn't happen, or didn't happen, right? So that's just an example, right? So you want to make sure that your company has a good reputation, and good reputation is sometimes stepping out and doing something that is not really aligned with it's not like, it's not that it's going to give you say that it's not going to give you money, because at the end of the day, if somebody sees that a company is doing more for society, doing more, doing something that is different, they will actually gravitate towards that company, right? They would say, I've seen people that say, oh, buy this, we will give so and so to charity. They do things, right? And they do things within their company. So you want to make sure your company has a good reputation. And to have a good reputation is not only branding, going out there, oh yes, we're the best. No, we're not talking about your products here. Yeah, products are very good. Good products are good. But what are you doing extra to make sure that your reputation is out there and people see, wow, right? And of course, having good products, reliable, dependable products, are very good. Service is excellent, very good. But what are you doing that is really that is a bit different to boost your reputation. Yeah, and truly that can actually give it can positively impact your business. All right. Now, a lot of large companies, very large companies, they do this, right? They do this, right? And a lot of SMEs might say, you know what, I don't have the time, I'm so busy. Now, there's so many ways to grow your business. So I always tell people, if something's important to you, you will make out time. That's what I feel. If something is important to you, you will make out time, right? So that's what I would say. All right. So the third factor here, the third non-financial factor is legislation. Now, legislation, when I look at legislation, right, I look at so many factors under legislation, right? Now, remember, these are the factors that you have to consider, right? Like these factors can impact the success of your business. Under legislature, we can look at several things, right? We can look at the laws, business laws, and sometimes specific laws that pertain to your business, right? When I say general laws, then specific laws that pertain to your business. Do you know it? Do you know how it applies? Now, a lot of times people only, okay, let me even add tax laws, right? Tax laws, general laws, and tax laws, right? I'm not an attorney, but I have a master's in tax, right? But I'm not an attorney. So I know that so many times, tax laws continue to change, right? They continue to change, right? And so how are you keeping up to date with those changes? What are you doing? Remember, people think that these laws that change is only for their detriment. No, 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 no. There are laws there that are for your benefit, but if you don't know them, you can't take advantage of that. There are some laws that are put in place for small businesses that would positively impact those small businesses. So many. But if you don't know that, you can't take advantage of that. So you have to make sure that the legislature, right, or legislation, you know what's happening, you know what's going on, right? What is going on in your industry, what's going on in the businesses, and of course, you know that, right? If you're not compliant, so let's look at it. If you're not compliant, you know that ignorance is no excuse, right? If you're not compliant, what will happen is that you can end up doing what? Having penalties, interest, all those stuff, right? And that can negatively impact your business. But if you're compliant, right, make sure that you're keeping up to date with changes in the tax laws, making sure that you're not only keeping up to date, you're actually benefiting from them when necessary, and also meeting what the requirements when necessary. All right. Now, when I look at this, right, I know that some small businesses might say, how do I keep up with this? This is remember, we're talking about non-financial factors, right? You say, how do I keep up with this? What's going on? It's a lot. Well, I mentioned this some time ago about outsourcing. I tell my clients, we offer outsourcing services as CPA outsourcing services, because I tell my clients all the time that, they're not in business because they want to understand tax or understand their books. That's not why they're in business. They're in business because they love what they do. And I know that large businesses, they are good, they have a robust tax and accounting department, but many SMEs, many small businesses overlook this non-financial factor, many of them. But the excuse is, oh my goodness, I can't afford this. It's so expensive. Yeah, to hire a full-time accountant, full-time CPA on staff. And I get it. I get that. And that's why, I always encourage small businesses, take advantage of outsourcing, and just not anybody, outsource to people that you believe can do the job, right? I've mentioned outsourcing marketing strategy or marketing work, and when it comes to accounting, tax, interpretation, and when it comes to that and business running, or running of the business related to, the finance, accounting, tax, and all those good stuff, right? It's good to outsource, right? And yours truly, please give us a call. We can help with that. Remember, we're talking about non-financial factors, right? So the legislation, right? What I would say, really, the legislation, which is all the laws, the tariffs, all those good stuff, right? Very important for you to know them, right? Know them, right? Be compliant, right? And also take advantage of these laws, take advantage of maybe reducing tariffs, take advantage of things that are specific to your industry, right? There's some laws that might be specific into your industry. For example, here in the US, right? People that you see a lot of people buying electric cars now, right? Because the government gave them tax credits. Of course, it depends on the electric car. Of course, it's not, it depends on the electric car, right? So that's an example. There are so many other ones, but that just came to mind, right? So very important for you to know that. All right. Okay. The fourth non-financial factor is the environment, right? Environment. Now, it also depends on your industry, right? But generally, when there is certain, things in the environment, there are so many we could talk about. Expand on this so much, right? Expand on, the environmental factors. That there are so many we could talk about politics, right? How does politics affect your business, right? Maybe the laws that might be passed. Although I know I talked about legislation, right? But in this case, I'm talking about where does your business stand? And I'm not talking about the political part now. I'm talking about, how the political environment affects your business. Now, it depends on, I know it depends on the country. Sometimes, some countries, might be really stressed out when it comes to, change in power and things like that. Some other countries may not be, but it just depends, right? Then we look at what's happening about this green energy. I know I mentioned that example when I talked about and maybe your management team and core values. Now, you want to see maybe you now with the environmental factors, we could even tie some of these factors together. Like now, for the, I talked about vehicles that now, that there are some credits when you have electrical vehicles, right? You see how in the environment is tied to this environmental factors, is tied to the green, meaning that, sustainable in the environment by reducing pollution. So that's what I'm talking about when it comes to the environment. Yes, you might say, but environment now is tied to the legislation. Yep, it can happen, right? So it could be so many factors. There are so many environmental factors that we can, look at and see how does it, again, we're looking at non-financial factors. Now, these environmental factors I'm mentioning, it depends on your business, right? It depends on how it affects your business, right? Now, somebody that has maybe a CPA firm like mine might not have the same environmental factors that affect a manufacturing industry, right? So you have to really know, right? Where do you stand, right? When it comes to environmental factors, it's specific for your industry, right? And sometimes there are general environmental factors, right? That might not be specific to your industry, but it's very good for you to know them, right? So again, these are non-financial factors, right? To see what's the impact, what's happening, right? What's the general impact when it comes to your business, your industry. Now, one of the things I continue to advise small business owners is that you should do your best to continue to go for meetings with your colleague, your mates. I might not say, I won't say colleagues because you're not working with them directly. I'm saying that with your industry mates. I hope you will understand that. Business mates, right? You have a business that is a bakery, which I know you guys have heard this before, and I'm going to be better, but just think about it. A bakery, right? And then you have you have there's a baker society or something like that, or bakers. This information sharing. So it's very important for you to continue to relate with them so that they can actually, maybe things that are common to that industry. You see that on the platform. Now, I have to step back a little bit on that. For example, when I'm talking about it, let me step back a little bit. Now, for the legislature or legislation, right? When I talk about the laws and things that impact. Now, even if you have let's say go to your society meetings, right? Or when society industry meetings, what I would say by the industry meetings, not society, sorry about that. So industry meetings, right? And you see that these laws are passed, taxes or things like that, is still important, right? Because remember, information is one thing, application is another. All right? Get that? Having information is one thing. But if you don't know how to use that information, then the information is not useful. All right. So you have to still work with a professional to say, okay, oh, this is what they're saying in my industry. What is the implication of this? Right? CPA, talk to an attorney, talk to anyone in that is a professional that would relate to that, right? To see that anybody that has knowledge or knowledge base to explain that. All right. So I wanted to make sure I put that out there. Now, the fifth, which is the last in my own context, again, the list is not exhaustive. The fifth is customer and employee dependency, or yes, customer or I put them together, employee dependency. Now, it's so important for you not to have one major customer. I know this is, maybe usually it's something that could happen in the service industry, really, because most of the time when people are selling products, well, it might not happen. Products might also happen. Maybe you're a company and one company buys, maybe you sell candles and only one company buys maybe 90% of your candles or 80%. That's not a good thing. That's not, you cannot be dependent on that one customer, because if that one customer decides to step away and say, you know what, I want to change my provider of candles, that will be a big problem, because that's 80% of revenue out the door. So you cannot be, that's why I'm talking about non-financial factors. And also the flip side are also the employees. If you have, some employees, they don't even want to share knowledge. They have known this for so long, they don't want to share knowledge. You cannot have an employees. It's very important for you to have, a manual, of maybe a process, right? A process, I know that this is very, common for someone that is in the IT industry, because sometimes the process, how do they share? But whether the IT industry is not, I'm saying common is not that it's only in the IT industry. When I say IT industry, maybe IT profession, because every company needs someone that is an IT professional, either outsourced or not. You need someone that, so you don't want to be dependent on that employee. Even if that employee is someone that is very the employee is someone that is the main person, even in doing things. And I believe I spoke about segregation of duties, right? Separating the responsibilities and the duties of the employees, so that nobody can, of course, I talked about that when it came to how to prevent fraud, right? It's very important for you to segregate employee responsibilities. But generally, that's what we don't want that to happen. You don't want an employee to be so powerful that the person knows everything without sharing the information with others. And of course, you put controls in place, like I mentioned, to make sure that nothing is being taken away, no fraud or things like that. You have things in place to control that, right? So you want to make sure that you're not dependent. There's no customer dependency. There's no employee dependent. You're not 100% dependent on this employee. If the person steps away, there's a problem, right? If the person steps away, the files you can't even find where the person where the person kept these files. It's very important. Now, what I always tell people is that, I know many large companies or whatever, let me go back to my statement. What I always tell people is that, let it be that if an employee says, I'm okay, thank you, that I'm fine, it won't really have a serious impact on your company. And also, it could be that you don't want that employee to continue working with you, right? So you have to really make sure that nobody, when it comes to your company per se or company per se, you don't want to make sure that nobody is indispensable. Of course, we're not talking about you're the owner of the company. I'm talking about employees, right? And also, when it comes to the flip side, you don't want to be 100% dependent on, or maybe 80, let's say even 80, even 70% dependent on one customer. If that's what's going on right now, you need to step up and grow your company. Step up and grow that company. You need to step in. I'm not saying that, of course, we're happy that that first person, that customer, that client is giving you good business. We're happy, but you need to step up and make certain changes, because remember, we're saying that here, or I'm saying, and this is not this what I'm saying is general knowledge, based on my background, what I know. Of course, as I said, the list is not exhaustive. Now, I will say that it's so important that you do your best to increase your customer base, and also do your best to ensure that employee is not in that is dispensable. I'm not saying in a bad way. Dispensable meaning that if the person says, you know what, thank you, I really appreciate, it's an honor working with you, and the person can walk out the door, right? The person and there's no problem with that. All right. There's no problem with that. Okay. So, and you thank the person, but your business will not be crippled up because of that person saying, I'm leaving, right? Okay. So those are my five, my five non-financial factors based on, my knowledge base, and, my own, research background and what I've experienced, right, with customers and clients. And I would say that of course, there are a lot more non-financial factors, but I just feel that a lot of us pay so much attention to the bottom line, which is good to look at. Oh, how much profit did I make? It's not bad. I'm not saying that that's bad, but these are factors that can drive up your profit, can make you successful, can say, yeah, or these factors, if you don't consider them, that number you've been looking at as the profit can actually reduce, right? And you don't want that to happen. All right. So these are the non-financial factors. I hope somebody was able to take something away with that. All right. With these five factors. And then of course run with it. And of course, again, it depends on your situation of your company. And again, important for you to work with a professional, because this is for informative purposes only. All right. And educative, of course. Now, I have some questions here. All right. All right. The first question is, okay, I have a small eatery. All right. And I am having issues costing my meals. How can I get around this? Okay. Now, I know that people in the restaurant business, I know that sometimes it can be challenging, right? So usually in the restaurant business, you want to find out how much this plate of food that you're putting in front of somebody, how much does it cost to make that food? Now, it's not only the food itself, right? You have to put so many factors in that analysis. What about the labor, the person that's actually cooking, how much you pay that person? I mean, if it's only you, of course, there's a way you can allocate that. Now, I would say that this is something that is, that is important for you to look at an accountant to help you do that. Of course, yours truly, you can always, come to us. But it's very important for you to know, how much that meal costs, how much you're putting that, how much does it cost, so that you really understand the profit you're making on that meal, right? And why is this important? Now, if you have maybe 8 dishes, let's say very 8 dishes. Let's make it maybe okay, let's call 10 dishes. 10 dishes, right? When you know the cost of making the meal, right? it's easy for you to calculate the profit per meal, right? Profit per meal after putting the value or the cost of the meal and also the sales price, right? With this, you would know, how much profit are you making per meal and what is the demand for that meal. It's all about planning. Now, let me start an example. If you have a meal, let's say you get an accountant or yours truly to work with you, you have a meal that costs, let's say, $5 to make. Let's just make, $5, and you can sell it for 20. Let's just say for $20, right? That is $15 profit, right? Now you have another meal that it costs 10 to make, and of course, you put it same to, let's say you put it at maybe 20. Let's make it 22, right? 20. And that's $10 profit, right? Yep, 20 minus 5, 15. And okay. Now, if you see that more people are ordering for the one that has a high, maybe the one that costs $10 to make and 20, you still sell it at $20. What you can do is, because of planning, because now it means that even if you bump up that other one a little bit, people will still buy, right? Bump up. So this is just, again, it's a general example, but it's so important for you to know how much does this meal cost? What is the cost of this specific meal? It's part of planning, and that's how you make your good money. Because if something is not being sold as much as the other, I mean, you concentrate on one and make that one and push it up so that you can make more money, right? Because even though this one is cost $5 to make and you sell it for $20 and you make $15, what about if you're not even selling a lot in a month? What I mean is that you're not really making that profit as much as the one you're selling and making a profit of $10, but you're having a high sale, if we call it turnover sale, like sale, you're selling it very well, right? So it's a lot of turnover rate that you're selling it, right? So you have to get someone that can work with you to really, determine the cost of your meals, right? The cost of the meals. All right, very important. I know that a lot of small eateries, they might take this for granted and they don't know, they might just assume. But I mean, if you drill in and do a better analysis, you will definitely, make it, planning will really help you make, I believe, a higher profit. Just planning. All right. Okay, the second question is, I see that a lot of time my budgeted figures are exceeded. How can I fix this? Okay, so I believe that this is when you have a budgeted amount and then you spend more. Of course, it means that there's a negative variance. A negative variance means that you're planning to spend $50 and you end up spending $80. The variance is 80 minus 50, which is 30, right? So you're spending $30 more. There could be certain factors. Number one, it means maybe your budget is not realistic. Okay, that could be one factor. Maybe. So first of all, I would say go back and check if your budget is actually realistic. How do you do that? You just find out, okay, why is there a difference? And if this difference has been more than once, you find out. Now, if you find out that, oh yeah, your budget's realistic, this is what you spent the last month, the month after, and and this is realistic, then okay, then go to the second step. You dig in and say, why? What's happening? Could it be that that month there could be a reason why you actually spend that money, that high amount, right? It could be maybe there were additional items that needed to be bought because this sales has increased. It could be anything. So, but again, I would say that you have to dig in, do an analysis to say, okay, what really happened? Is it that there's something wrong with my budgeted figures, or could it be that somebody's trying to be funny? Because let me tell you, you can use a budget to actually determine if there's fraud. You can do that. But I always I personally don't feel that I refuse to think that there's always fraud. I always look at, okay, could it be that something happened? Could it be that an expense that happened was not supposed to happen in error? I like really sitting down or to analyze before I draw a conclusion, right? So the question is, how can you fix this? Is check that your budget is realistic, right? Check, when it's realistic, check if it's realistic, check if there's a specific factor that is making this your budget to be a high variance. So check that. All right. So how can you fix it? You can only fix it if you know the cause of the problem. Once you know, because the fixing could be different, various ways to fix it. But you have to first of all know the cause of what's really happening there, and fix it accordingly. And again, I would say that you have to work with a professional to just look at what's happening, run the figures, and then find out what's really happening, right? And how can you do this, right? You work with a professional, and as I said, so that they can actually run the numbers for you. All right. Okay. We have some a little more time, so let's look at the next one. All right. The next one is ratio analysis necessary? Now, for those that don't know what's ratio analysis, now is we have some ratio analysis we use in accounting, even in finance, where you look at the ratios, maybe the current asset ratios, the sales ratios, all those ratios, which I'm not going to break down on how to calculate that. I'm not going to break that down for you, but I'm just saying that what is ratio analysis necessary? My answer is yes, definitely. Why do I say definitely? Ratio analysis allows you to see, first of all, I always like comparing my ratios with industry, the people in my industry, right? If I'm doing ratio analysis for my client, that's okay. For my client, how does it work when it comes to somebody again in that industry, right? If it's somebody that is into, I know you guys are going to get tired, but a bakery, I know. Please don't get so tired of that. We love our cakes, but we don't have to take so much of it. But let's look at it. So if it's something like a bakery, right? And then I'll look at, okay, somebody that has the similar bakery. What's the general ratio analysis there? What is the max, the range, and see if you meet that range. If you don't meet that range, or it could be maybe somebody that's into maybe a consultant, see, okay, consultant, an engineering consultant. Look at that other side. How does that work? So the range also. So I would really say that the most important thing is the answer is yes. And I would say that yes. When I say yes, I believe that it helps you to do better. If your ratio analysis is not in line with the industry trends, I would say that I would personally find out, or this is, again, my own thought process on this is that find out why. Why are you below the industry trend? What's going on? Why are you not doing as well as that as other people are doing? The goal is that you have to find out, you should do at least better than the competition, right? Now, if a ratio analysis shows you're doing well, kudos. It's just a check. You're checking. Oh yeah, am I doing well? Am I meeting what is required? So it's just a check. So I would say it is very necessary. A lot of times, small businesses take these things for granted. Large businesses, they have everything covered, and I get it, right? Small businesses might say, okay, oh, right, the resources. And again, that's why I continue to encourage you, right, to work with I'll source this work. It's so important because at the end of the day, right, you will reap the benefits, right? You make your money, you reap the benefits, right, at the end of the day. So because when somebody can analyze and say, okay, let me check this, see how this is better, see how you can get this, and analyze that at the end of the day, right, you will see how to compare apples to apples, find out that why if you're doing well, or if you're not doing well, what is the reason, right? And remember, it's apples to apples. You're not comparing your industry with any other company, right? With another industry, another company, right? Please make sure it is in the same industry, right? And apart from the same industry, we look at some criteria, right, to see, or look at a criteria to see maybe this criteria matches, or criterion matches, not just any, even though it's the same industry, is it the same size, and all those kind of factors. All right, so thank you for being here today. I mean, it's been a wonderful time. And of course, I know you could be anywhere, but you decided to be here. I hope you got something today. And remember, to make sure your company is thriving as an SME, you have to be intentional. All right. See you next time. Bye for now.